What would a soft landing look like? The Fed has mentioned it multiple times, kind of this Goldilocks situation.
Yeah, actually, Jay Powell said that he knows it's not the consensus, estimate that we will end up with a soft landing, but he sees it as a possibility. Read what you want into that, but what is it? So, because honestly, if you watch some of these conferences, the people that are asking the questions know a lot about the market. So, first, I would start with what it's not. It's not a recession,
Hmm.
right? I mean, that's one of the easier ways to kind of understand it. So, recession usually means high unemployment, economic pain, right? Maybe more defaults on loans and different things along those lines. Um, a, a situation like this with the soft landing, you would just have slower growth.
Yeah.
Pretty much what we had last year, maybe keeping going for a while. So, for example, last year the GDP growth was 1%,
Yeah.
right? That's slow growth. And the Federal Reserve Chairman Powell talked many times in all of his speeches about subpar growth is what they're expecting. It's what they're trying to accomplish because they need to get some of this demand to come back down. And so it worked on goods, right? They brought demand down,
Hmm.
and now we're starting to see goods, literally deflation in the goods area. But the problem is really in services, and so they're trying to have people spend less money by, making things tighter. Um, and really, to me, it's a blunt tool they're trying to fix. It's all they can do. But that's why this jobs report today, I think, is so important.
Hmm.
It does lean itself more towards a soft landing because if you get more people back into the workforce and you do so with, less growth in pay and the participation rate comes up, you end up with a situation where you might be able to, have that inflation come back down because job growth helps both sides.
Hmm.
Keeps you away from a recession, at least temporarily, but it also fills a need, and we need to get people back to work to get inflation down in services.
Yep.
Right? I mean, it's a simple example. If there's a line outside the door of a restaurant because they don't have enough bus people and cooks and waiters and what have you, that means that restaurant could charge more per seat,
Hmm.
right? And because the demand is there and people are desperate to go out to eat. If, on the other hand, you have enough people working there and the demand is still the same, but the line is shorter or non existent, restaurant doesn't have the same power to move that price up, right? So if you need the people and you need to get the people. So that's why I think today's report with 517,000 jobs created in January versus 188,000 expected could be a leading indicator of what might be helping in the analysis of a soft landing. So it's a narrow landing strip,
Yeah.
you know. So and it's 1994 is one that they talk about. So that just tells you it doesn't happen very often because you
Hmm.
can name them. There are not that many. So. However, there are a lot of different variations of recession too. Obviously the 2008 recession was really, really bad, versus 2000, which was pretty bad also, but not quite as bad as 2008, for example. So you can end up with different levels, and the markets already had dropped 28% from high to low. How much have they already factored in lower earnings, lower, a possible recession, anyway? Because in the end, it's not so much for me about soft landing as it is about what's the stock market going to do.
Yeah.
And it would do better in a soft landing situation. But it's a good question. It's something to really try to understand. And it will be the battle that is going to happen this year. Most people expect a recession to start in the second half of the year. If you believe in a soft landing, then maybe you don't expect that, right? So,
Yeah, and there's been talks with I think the Goldman Sachs economist essentially said that Fed will keep interest rates all the way to 2024 without decreasing them. So
right.
they're maybe seeing less of a recession chance.
Yeah, because that would be the thing that makes the interest rates come back down, right? I mean, why would the Federal Reserve lower rates? They'd lower rates because the economy is falling apart or unemployment's getting untenable, and so they want to support that by lowering rates back. The futures market is expecting some rate decreases later on in this year. That's a sign that the future market feels like there'll be some type of recession in the
Hmm.
later portion of this year. But the Federal Reserve has said that they're not planning on lowering rates at all in 2023. Multiple sources have said that, including Jay Powell during the conference, the Q&A this week. So, again, if you look at that, that means they're not expecting a recession to be happening either. So their track record on what they expect and what's happened has been a little bit suspect. So we'll see how that plays out. But nonetheless, that is the battle that we're going to be talking about. It's probably one of the most important subjects. What's this recession, if we have one, going to be like? And the market's going to have to react to that. In the end, the rubber does hit the road. It is about earnings. First quarter earnings are supposed to be worse than they have been so far, so that's good. So it's quarter by quarter. What's going to happen next quarter, third quarter, et cetera? How does this play out?